Hello, I'm Trader Bobo. Welcome to Trading Concepts Part 3. We're talking about Fibonacci retracements today, how they're used, how they're calculated, what the numbers actually mean, and how you'd be using them in your day-to-day trading or your swing trading or whatever you like to do. So if you have never seen the Fib retracement tool, it's in the left panel here. It's got the lines of the two dots, round circles, whatever you want to call them, and you pull it from up to down or down to up, high to low or low to high. So what you'll get when on the Fib retracement tool is a few numbers, a few lines. This isn't the default setting you'll see, but you can turn various levels off, add a trend line, add a background. You can look at just numbers or levels or whatever you want to do. I'll leave that up to you to want to do. What we're looking at now is how these numbers are calculated, and we'll get to what they're used for. So these are Fibonacci numbers derived from the ratio, the golden ratio. So if I bring this across, I've tried to bring this to show you. So Fibonacci, a 13th century Italian mathematician, found a pattern where the previous two numbers added together is this, and then you add up these two numbers together in this. So basically it's just a pattern of adding up the previous two numbers. For example, 55 add 89, 144, 233 add 377 is 610, so on and so on and so on and so on. This is classed as the Fibonacci sequence. It means nothing at the moment, no correlation there at all. But what he discovered is looking at the current number in relationship to the previous number, dividing them, in this case, it came up with a ratio or a pattern. And this is also the other way around, dividing the next number by the current number. So if I just populate the spreadsheet, make it easy. So after about the 10th number, he found, again, 55 divided by 34 is 1.618, or the inverse, 34 divided by 55, 0.618, which you see here. So we're looking at retracements today. So we're looking between 0 and 1 normally, and we'll go into what these mean later. But he found this number here, 1.618, to be synonymous in nature as a pattern. Let me bring up a few pictures to show you. So he found how snails, the line move away. You can see this correlation here, this line, and here the universe, spider webs, eggshells, cactus leaves. They all had a pattern of expanded by 1.618. Even the sort of hand-to-arm ratio and all that sort of stuff. So everywhere throughout nature. You can do some research. I'm not going to go into any more detail on it, but 1.618, and these numbers are everywhere in nature. So this is brought into trading. Trading is based on human nature, so it all just goes into it. So what do you use these lines for, and how do you get the rest of them? So let's have a look. Go and bring back this spreadsheet. He also looked at the relationship between the current number and the number 2 ahead. Again, both ways, calculated both ways, and the relationship between the current number and the number 3 numbers ahead. So again, if we bring this down, we'll see some numbers that are in this chart as well. So 0.618. The opposite of that, obviously these add up to 1, is 0.382, which is here. 0.236. And the opposite of that is 0.786. This isn't obviously populated here, but this is the halfway point. So that always wants to be on your fib. And this here, because this is such an important number, 0.618, this is classed as the golden pocket. He classed his 1.618 is the golden ratio, but in trading terms, this is the golden pocket. And you can give that a bit of a buffer. I use 0.65 as the little buffer. I've seen 0.66, 0.7, whatever used. But in this scenario, this example, I'm using 0.618. So I think I've got everything across there. We'll look at these numbers when we're looking at trends, which we're not going to look at today. So how do you use, or what do you use a retracement? In an uptrend, you go from low to high, and I don't think I've done that. Let's switch this around. That'll look the other way around. So when we're going from low, you take the lowest low and the highest high, and we're looking at how far price, this is price, will retrace. Commonly, it returns to the golden pocket. There's different ways you can use this. Sorry, bringing up the wrong sheet here. Got some notes. There's different ways you can use this. So this is a bearish, a bullish move, but you're looking for a retest. If you get a retest around here, around the 0.236, it's a very strong move. So if you get a bounce and then bounce up, it's a very strong move away. Even so, even down to 0.382, it's a deeper retracement, but it's a very strong level when you're talking about fibs. Halfway point, I'm always interested in the halfway point. I use Ishimoku a lot, and this is very important, obviously 0.5 in Ishimoku. But then you go down to the golden pocket, you'll be surprised how often price retraces down to the golden pocket. And if it's a deep retracement, you're looking at the 786. I also populate on my chart normally the 0.886. That's used a lot for harmonic patterns, but I'm not going to talk about that today, so I've removed it off my chart. So let's see if we can find some examples where price moved either way. If you're taking it from a bullish move, the impulse move up, the retracement, or if you're taking it down the other way. So you'll be looking at price coming down to this point and how far it moves up before another leg down. So let's clear this off and have a look. I don't even know what we're on. We're on dollar. So let's see if we can find some examples in history of the dollar. I believe this was a good example. Impulse move up. This is where you're taking it from the low to the high. And you can see the retracement perfectly into what is known as the golden pocket. Fibs are very good for looking at confluence as well. You've got another swing low here, another swing low here. Let's pull this swing low. And as you can see, the halfway point is also in the golden pocket of this bigger fib retracement. It's also very close to this area here. So when you're pulling fibs, it's very good to look for other fibs you can pull to see if there's any sort of confluence at all. There's one perfect example right now, and that's NASDAQ. We'll keep on, let's keep on. Let's go back to daily. Let's go to the daily. So NASDAQ, if you don't know, we've had a really strong move up since the COVID crash, and now we're in a corrective phase. Whoever knows how far this will go. But again, if you're looking at fib retracements on this move here, let's get this magnet off. Perfect example of how price moves into the golden pocket. So when price moves into this area, you're looking for other things. There's another reason. You've got a pivot point here, you've got some highs that are taken out here. So if it makes sense, that is a good area to look for a trade. You've also got bang on, I'll take the magnet off so it might not be perfect. But again, the same thing happened last week. Move up, taking out these highs, and perfect test there to see if there's any confidence. You've got the your halfway point, your 0.5 just above it. So that's two really nice examples of fib retracements. And then now you'll be looking at for the other example. You're seeing from the impulse move, that is your impulse move at the bottom here. Let's get the magnet back on. So what you're looking for, straight away you can see this is a really good example of where price could go, and taking out these lows. So I doubt this will happen because of the way the world works at the moment, but you could get a really good test of this golden pocket, take out these lows, and you could get a move higher. Unlikely, but fibs are important, but you need to know the market conditions. I'm more than likely to pull a trend here, which I'll go over in part 4, to look for lower lows, see where we're going to go next. Let's pull this higher one to see what else. COVID crash up. So you'll be eyeing up these areas here. If you pulled a trend, which will go next, there might be some sort of correlation down here as well, but this would be my target. I don't always keep this fully on my chart as well. I will quite often annotate my chart with a little golden box and get rid. So if you ever see my charts in the future of this is the golden pocket of a significant, very significant price move. We could have a look at a couple more. There was one really good example. Oh, look at that, I've got one in there previously. Must have been doing some research. Bearish move down, retracement into your golden pocket. Really good example there of a good bang on golden pocket. You've got this was a really good one. So this is your bullish move up. You're breaking market structure. As soon as that happens, you got your sell hat on. You're trying to offload any bags you've still got, or short any close any positions. And it gave you quite a few days of trying to sell your bags, and that's what the big boys were doing, in all honesty, in these periods here. So you got 2 weeks of selling your bags, and you could sell at any time. So yeah, that's fib retracements, how you use them, briefly how you set them up. You can, whatever sort of colour you want, works on any time frames. We've just had a bit of a smash down from as NQ as the traditionals hit a zone. So I'm just looking at this. We're going to break this because the traditionals look like shit. But yeah, if you're looking at, if you did move up, we could easily get a nice move up. And again, this is a nice pivot zone. So you're looking at confluence, you're looking at areas here. Have you got any support zones, weekly, daily? Well, if nothing, because that was just a full week. What I was looking at previously, when this was coming up, was this zone here. You had a really nice weekly area here, not much of a resistance, I must admit, but also not much previous support, as you can see. And I was looking at a move up to here, so I was playing some longs, trying to get up to this point. In the end, got stopped out. But yeah, that's fib retracements. That's the tool free on TradingView, which is very good. I think I've covered everything I needed to cover. When we finally get into live market examples, it'll be easier to show. Works on any time frame. Look at that one there. Didn't even know that was going to happen. So this is on the 1 minute chart, and we're talking, yeah, 2 hours. 2 hours of trading. You're possibly looking for a zone here. I'm certainly not looking to long at the moment. So I'll be looking at the opposite way around. Again, I don't know if this works out. This looks pretty close. And again, what a good example that is. I'm glad I brought this up on the 1 minute of price coming down, coming into your golden pocket and coming back down. Again, context, wouldn't be long in this. More looking at your next level and then further and further. So yeah, something you can just trade on golden pockets, but adding that with other skills you have is the way to do it. So hopefully that made sense, was insightful. We're looking at trends next, and hopefully should explain what these other numbers here mean, how you use them. So yeah, I'm Trader Bobo. That's part 3, Fibonacci Retracements on trading concepts, and I look forward to seeing you in part 4. Take care.